Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, April 1st, 2020, and we are again in the final hour of the trading day. As I mention each day, in my opinion, the most valid time of the day to make your buying and selling decisions is in the last hour, particularly in the last few minutes of the day. During the day, you have the algorithms, you have the day traders. They're battling it out with not a lot of volume. At the end of the day, the large financial institutions come into play. They take over the control of the price movement from the day traders and the algorithms. In my opinion, they have the best information. They're dealing with the most money. They have the best technology. They have very smart people, and they start making their bets at the end of the day and move the price, take control of the prices away from the day traders and the algorithms. And so their final prices are the prices that I mainly want to make my buying and selling decisions from. So thank you so much for coming today. I really always appreciate seeing everyone here. I think we have such a great group, some very smart people, some really good input, some great poems, and I think a nice community. So I really thank you so much. I always look forward to seeing everyone here. So hey, Kamal is here. Good to see you, bud. Kamal and I were chatting a little bit ago over Skype. Always nice to have Kamal here. Andrea is here. Hi, how you doing? Good to see you. Hi, Kamal and Greg. Hello, Andrea. Good to have you here. Hey, Miko25. Hello, everyone. Hello to you. Hope you're doing well. Hope you're having a good day. I hope we're all staying safe out there with this market. It's another crazy day with the market. What are we down? Well, let's take a look at that and we'll see. So Dow Jones down 911 points, down 4%. NASDAQ down 326, down 4.24%, and the S&P is down 114 points, down 4.2%. So between yesterday and today, about 1,300 points down on the Dow. So yep, interesting. So I hope we're all staying safe out there. Of course, you never can stay safe in the market, but you can really help. Your cause by position sizing correctly, not taking too many positions at one time, adjusting for volatility in your position sizing, and that's about all you can do, right? And then the market's going to take you where it's going to take you. So, okay, well, I think today's April Fool's Day, right? I haven't seen any April Fool's Day headlines or anything. I don't think it'd probably be appropriate with what's going on here. It's been a crazy world, crazy market. I think we're all going to remember this, but trading through this market, as difficult as it's been, hopefully you have learned some lessons. Hopefully not hopefully, but if you have traded through this, you have gained experience. So if you have lost money, that's unfortunate, but on the other side of the ledger, you have gained experience in dealing with market crashes, dealing with increased volatility, increased ATR ranges. So anyway, hopefully we will learn something from that going forward. So, okay. Hey, Andrea says, on today's Apple 5-minute chart, do you see a double bottom with the bullish MACD divergence? Interesting that you say that, Andrea. I was just chatting with Kamal and we were looking at actually on the 1-minute chart. And this is a good time to mention this. It's a really good exercise, everybody, to, if you're sitting in front of your computer, you don't have to trade, but I'm just saying, sit in front of your computer, switch your charts to 1 minute and watch these different patterns play out, right? They play out quickly so you can get an idea of how you would have done, but you'll see these patterns repeat, whether you're looking at a 1-minute chart or whether you're looking at an hour chart or a daily chart or a weekly chart. The patterns are all same. They're fractals. They're time frames within time frames. They're patterns within patterns within patterns. You can see lots of things form, even especially on a 1 minute, because it happens the fastest. But you can see dips to the 30 RSI. You can see return back up into the value zones. You can look for higher V1s, V2s. You can look for moving average crossovers. You can look for double bottoms with bullish divergences. You can look for return to values. It's a really good exercise just to, I think, one, for your confidence, so you can see how these patterns repeat over and over and over and again. Let's look here. Yeah, so Andrea, this is a 5-minute chart. Yeah, we have a bottom here. We have the low here on the 5-minute. We do rally, creating some green. Now we are, let's see. Okay, so, when you have a double bottom with the bullish divergence, the second bottom, the MACD bars, ideally should be less than half the depth of the previous low. Right here, yes, it was less. Now we're kind of getting equal to. And another thing I might mention here, double bottoms with bullish divergences work best if the bottom with the next bottom with the divergence happens within 30 bars. This is more than 30 bars. So the further you have to go back for the divergence, probably the less helpful the double bottom is going to be. I mean, if we had red here and then we went green here and right back with red here, that would be good. But here, now it's not a divergence. It's pretty much equal, but it's 30 bars back. So does that make sense, Andrea? Kamal, Mount Doji is here. Hey, I miss Mount Doji. Good to see you, buddy. Appreciate you coming as always, sir. Hope you're having a good day. Kamal says, I am watching GLD, which seems to be making a comeback today after it shook everyone out yesterday. That's right. Well, it didn't shake us all out. If you remember, we sold half, but we'll go over that in a sec. Hey, Zach, good to see you. Good to see you all today. Good to see Zach. Thank you for coming, Zach. Always appreciate you being here. Okay, so here's the plan for today. As usual, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them moving forward, what was my thought process, what type of trade was each one. After that, we do have a couple trades that some of you were nice enough to share with me that are up on the board. We'll take a look at those. After that, we'll talk a little bit about trader psychology or good trading words of wisdom. Today, we're actually not so much about psychology, but just some good tips on putting together your portfolio and different trading approaches. But, since I'm talking about trader psychology, never hurts to repeat. You have to be able to follow your plan. You have to learn about trading, support, resistance levels. That's all very important so you can make a plan. But once you make the plan, following that plan is a whole lot more difficult than making the plan. And in my opinion, the best way to follow your plan is turn down the volume on the gains and losses, and do that by position sizing correctly, right? Take a small position size, something that matters, but not something that is going to, affect your emotions so much it's going to blow you out of the trade. So always very important: position size, position size, position size. In real estate, they always say location, location, location. Well, in trading, and really, in my opinion, it's position size, position size, position size. I was discussing this with Kamal the other day, but if you really get hammered, if you have a bunch of positions and you really get hammered, it takes the wind out of you. It's just a gut punch. And it's going to affect how, if you have a big drawdown or you have a big bad day, it's going to affect how you deal with all your positions, even the profitable ones. If you had not lost so much money that day, you maybe would have stuck with the profitable ones, and that maybe have been more profitable in the future. But when you just get hit so hard in the face with too many positions and too large a position size, then you're just like disgusted with it, and you just get out of everything. So it is very important not only to preserve your capital, your financial capital, but also to preserve your mental capital. Letting you take trades when you're supposed to, but if you're so disgusted with everything, you're not going to take that trade either, and that's probably the one that would work for you. So it's very important to stay even-keeled, not get too emotionally torn either to the up, not get too cocky or too despair, but try to stay right there in the middle, right in the value zone. right? Okay. Where was I? Then we're going to go down through my watch list. We're going to look through each stock one by one. Just quickly, the 3 requirements I have whenever I'm looking to enter a new trade. First, look for a combination or confluence of indicators. I look at each indicator like MACD or RSI, moving averages, ATR channels. I look at those indicators as groups of buyers. And you'll put yourself in a position, the best position to have a profitable trade. Doesn't mean it has to be profitable, but you'll increase your chances dramatically if you are in the company with as many other buyers as possible, right? Makes sense. If you want something to go up, you want lots of people buying. So if I can look for a combination or a confluence of indicators, or in other words, groups of buyers lining up on one time frame, ideally on multiple time frame, that is, in my opinion, the best way to put yourself in the position to have a best chance to have a profitable trade. Requirement number 2, even if you do have that confluence of indicators lining up, you have to make sure that you have a good risk to reward ratio based upon the support below you and realistic resistance above you. If I'm going to risk $100 on a trade, I want to be able to make $200 or more based upon the resistance above me. And number 3, very important, especially in this kind of market, do not have too many correlated positions. I have a friend of mine I spoke with last night. He told me he took some new positions, and he said, I'm very well diversified. And I said, oh, great. What do you have? He goes, well, I have Royal Caribbean, I have Princess Cruises, and I have Norwegian Cruise Lines and Delta. It's like, what? That's not being uncorrelated. I said, those are all, he goes, yeah, they're 4 different companies. I'm like, yeah, they're all in the travel and 3 of them are cruises. So, I mean, I don't understand. This is, he's a smart guy, but I didn't understand the thinking. But please, be very diversified in the types of industries that you're holding. Sure, an auto stock and a technology stock and a healthcare stock, that's fine, but don't have 3 healthcare stocks, right? It makes no sense. So make sure you have diversification. Step outside even of equities, gold, silver, bonds, something that's not 100% correlated to equities, because even if you're diversified in equities tend to go up and down together with each other 75% regardless of the industry. So you have to be aware of that. Another rule I have is I never take more than 1 industry in one day. I'm not going to take 2 technology positions in the same day for the reasons I just discussed. I can take 1 per day. I can have 2 if I took them on different days, but I don't ever have more than 2 technology stocks or 2 car stocks or 2 healthcare stocks at one time, and I never can buy them both on the same day. I like to stagger in. Then lastly, account heat. I mean, my account heat rule this year has saved tens of thousands of dollars, and I'm grateful for that. And my rule is I never put more than 60% of my account value at risk, even if they're in completely diversified positions. So that's my max. Doesn't mean you always have to have 6, right? But that's my maximum. So those are the 3 rules. 1, confluence, combination of signals. 2, good risk to reward ratio, at least 2 to 1. 3, not too many correlated positions, and be aware of your total account heat. So we're going to go down through the list. If I see anything that looks good, if I see anything that meets all my criteria, I will go ahead, take a position in that at the end of the day. And if there's nothing there, then I won't take anything there. So, and then after the market closes, if you have any questions for me, if you have any comments, if you have any observations, if you have any trade ideas, if you have any symbols that you would like me to look at, please go ahead, just type them in. I'm happy to give you my humble opinion on them. If you think something would be interesting for the group and you'd like me to discuss it before the market closes, if it's time sensitive, please go ahead, just put a star by, and I'll do my best to get to it before the market closes. So, all right, that's the plan for today. So if you could be so kind, hold on for about 40 seconds and I'll be right back. Thanks a lot. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, Philip Davis. Hi, Philip. How you doing? Greg, do you think the market is trying to find lows again? Well, Philip, first of all, thank you for coming. Nice to have you here. It's very likely, I think the consensus out there is that we're going to test the lows. Does that mean we're going to? Well, of course, I don't know. If I knew, we'd all make a lot of money, right? But it's certainly within the realm of possibilities, especially when everyone's thinking the same way. Sometimes it becomes a self-fulfilling prophecy, but it doesn't have to. It doesn't have to. If it does go down and test the lows, I think that it will be a very good setup. We'll have a beautiful double bottom with the bullish divergence. I'll show you that in a minute. But listen, we may have a new group of buyers coming in here tomorrow or the next day. You never know. And we might have some really nice higher low V1 entries with new groups of buyers. So I'll go over that in a little bit. But do I think we're going to test those lows? Honestly, I try not to think and have an opinion about it. It's likely though, but certainly not a for sure thing. So sorry to give you such a neutral answer, but really it's the truth. I just don't know. Greg, on Intel, that 200 is now not a valid line. I will definitely look at that in 1 second, Kamal. Mohammed is here. Hey, how you doing, Mohammed? Good to see you. Hey, Bing He is here. Appreciate you coming, Mohammed. Appreciate you coming, Bing He. Philip says, thanks, Greg. Your videos have greatly helped me put a better emphasis on planning my trades. Oh, I'm so glad to hear that. Those are the kind of things that make it all worthwhile. When I hear back from viewers that the podcast is helping. So thank you so much, and I'm glad to hear that. Just a minute ago, and then I'll look at Intel. Just a minute, well, not a minute ago, but a little while ago, I was speaking with Kamal on Skype, and I was telling him, why it's a good idea just to watch 1 minute bars, because you see things playing out quickly, and you can see how these patterns repeat. I let him know. I said, look, I'm not going to take I didn't take this trade, but just to show you, you can see the 1 minute bars were below the 1 ATR channel. We rallied up into the value zone. We came back down. This bar here is a V1. Here's day 1, day 2, rejects day 1, closes above day 1's close. On the 1 minute, rejects the negative 1 ATR channel. That's a really good setup. Now, my stop would have been halfway of the washout bar, which would have been about right here. Went 1, 2, 3, 4 minutes after it closed below, so it would have been a stop for me. I mean, it would have been a very small loss from 241.91 to 241.79. Again, these are 1 minute bars. I don't trade 1 minute bars, but they are good to see it, see these patterns play out. But okay, it would have been a negative trade, a losing trade. But you can see that you would have wished, then it rallied. You're like, oh, why did I get out? Well, then look what happens, right? Then it just down, 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 down. So, a lot of times when you get out and then it goes up, you'll think, why did I get out? But make sure you look and see when you get out, how often getting out was the right move. Andrea, here is a good example of a double bottom with the bullish divergence. We have a bottom, we rally, then we come back down. And we came back down to the test of this bottom with no red bars. So that's a major, and look at that. That was a good little trade. All right, let's look at Intel. Yeah, Kamal, I mean, look, we went under, over, under, over, under. So that 200-day moving average on Intel has definitely lost its validity as a valid support level, right? I mean, if it goes under and then over and then under and then back over, I may take another shot at it. But then when it goes back under again, I would really kind of have to wait for a different setup. Philip says, I love when a plan comes together. Yes, it's nice, right? Hey, gamer, good to see you, buddy. Appreciate you coming, Dave. Hope you're having a good day out there in Colorado. Mount Doji. Hello, Andrea. Always glad to see Andrew here. All right, well, let's take a quick look-see here, see what's happening. Gold. So this is a directional trade. I did buy gold back here on March 26th when we had the 520 EMA crossover. This is a good crossover trade. Back test well. Nice thing about crossovers is they give you a good structure to your trade. If you're wrong, you can be wrong fairly small. If you're right, you have the opportunity for a long trending trade. And so that's why I bought it. I bought it up here 153.75. My trading plan with this was get out of half the position if the price closed below both the 5 and the 20. Those were the crossovers I used to take the trade. So I did exit my half of my position yesterday, but my second half of my trade approach is keep the other half until the 5 actually mechanically crosses over the 20. So we'll see how this plays out. I did hit one profit target today. Unbelievable. Have not had a lot of those lately, but I'm very thankful that I did at least hit one profit target today. So as long as the price, the 5 EMA stays over the 20 EMA, I will continue to hold this half position. SPY. Well, SPY has just been brutal. In case we have some new viewers today, I do want to let everybody know why I do buy every day. I buy the SPY at the close. I hold it overnight. I sell it first thing the next morning. Has nothing to do with technicals whatsoever. It has to do with this long-term back-tested study from Lizanne Saunders at Bespoke Invest. This starts from 1993 and they test 2 approaches. Approach number 1, buy the SPY at the open, hold through the day, sell at the end of the day. If you use this approach every day since 1993, you'd return a negative 13.9%. However, if you do the opposite, which is what I do, buy the SPY at the close, hold it overnight, sell it first thing the next morning at the open, you'd have returned 634.2% return. So big difference between buying in the morning and selling in the afternoon, and buying in the afternoon and selling the next morning. Past performance is no guarantee of future results. In the past, this has worked very, very well. Over time, it has definitely had an edge, at least up till now. Who knows going forward, but if I'm going to allocate money towards something, I want to allocate it towards something that has a good back-tested results. Blue line is the buy in the afternoon, sell in the morning. Orange lines buy in the morning, sell in the afternoon. You can see there's a clear difference in the returns of each method. I've been using this since February 26th of 2019. 2019 was very profitable using this. This year has been very unprofitable with using this. But you can see, even though long-term this edge has played out and has had a nice equity curve, there are major drawdowns in between, and you have to be prepared for this. I really look at this trade as a very long-term trade that I make every day. I know there's going to be ups and downs, and the best way to be able to deal with these ups and downs is position size very carefully and very small. I generally use a 10% position size is all. But because of the increased volatility, because we're under the 200-day, I have switched recently to only using a quarter position. I want to keep with the plan, but because of the increased volatility, I want to lower my exposure. So with that being said, did get whooped up on today. Last week was nice. Had some great overnight trades, but today was a whomper. I bought the quarter position yesterday at 257.75, and I got out this morning at 248. So that was brutal. But again, trying to look for the silver lining, I only took a quarter position, so that minimizes it quite a lot. I will be buying it again today at the end, holding it overnight, selling it first thing next morning, and we'll just see how it plays out. XLF. Well, this has been kind of a bummer. This was such a great trade. This is a directional trade. I bought on 324. Nice setup. We had a V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. We went under 30, over 30, under the negative third channel, over the negative third ATR channel, had a false breakout to the downside here. Moved up nicely, almost 10%. I'm grateful that I did take some profits up here. That's why I really like to phase out, take profits, because you never know when the market's going to take it back from you. When I phase out in profitable levels, the market can never take it back. And if it does, puke like it did today to the downside, it mitigates my loss. So I bought it here, 1987, phased out here, some nice levels. Today, obviously, it's going to close below the previous day's low. I have to get out. The remaining shares that I have, I'm going to take a loss, but the shares that I phased out up here helps mitigate this. So this will be a slight loss, but not too much, but mainly because I phased out. That's why I am a big fan of phasing out. Apple, I don't have any directional trades on Apple. I did buy one long-term call expiring in June of 2021, so it's way out there, but I do have a plan with these option trades. I'm not just going to buy it and it's going to be one or the other. It's not going to be it expires worthless or I'm going to make a ton of money. I do have a plan with this, and the plan is if this week closes below halfway of last week's bar, and last week's bar is important because it was a nice V1, my stop on a directional trade will be a close below halfway. If it closes below halfway here, I'll just have to sell my call, take the loss on it, and move on to the next one. To the upside, my profit target here on the weekly is 305. So that's about it as far as the trades go. We do have a couple trades here. Bing He has a nice trade today. Bing He bought Clorox at 175.05. It moved up nicely for him, came back down, up 2% today. So he is definitely in the money on that. Congratulations, Bing He. Oh, and by the way, Bing He, yesterday you asked me about Netflix, and you asked me if I would have gotten out, and I said I probably would not have gotten out, Bing He, because it was moving up, didn't really reject anything, but Bing He got out, and good for Bing He. It's down 3% today, so you never know, right? I never know, you never know. All we can do is have a plan and follow it. Okay, so Joe bought Bank of America here at $21.99. His stop was $21.10, and it just happened to close above that, unfortunately. Of course, we wish it would have closed down so he would have gotten out earlier, but it is down pretty big today, so that's a bummer there, Joe. Okay. Joe is here. Good to see you, Joe. Joe says, hi, all. Just woke up from a nap. Nice. You're fresh and ready to go. Andrew says, looks like Apple 5-minute chart deep dip to the 30 RSI. I would imagine. Let's take a look. Yeah. Well, here on this 5-minute bar, Andrea, it went under 30, over 30. Is it a valid trade? Yeah. It also went under the negative third, over the negative third. So, two signals there. Had you bought it there on the 5-minute, you are slightly down, but trade's not over yet. Okay, Joe has a poem for us, I believe. Go into this market, but don't buy 6 pair. You must be very cautious and do it with care. If the stock market goes down and you want to cry, then the reason might be is because you didn't diversify. Oh, go into this market, but don't buy 6 pair. You must be very cautious and do it with care. If the stock market goes down and you want to cry, then the reason might be because you didn't diversify. Bravo, Joe. Right on point as well. I mean, it's amazing how Joe can write these poems, and they're just so on point. It's amazing. It's amazing. Thank you, Joe. Appreciate that. Glenn says, hi, Greg. Looks like Tuesday, 31st March was turnaround day. Looking for a new low next week, just as the worst Coma news peaks. Yes, I don't doubt it. Thank you for that, Glenn. Thanks for coming. Hey, Marco. Good to see you, buddy. Always nice to have Marco. Hope you're having a nice evening. Joe, I'm at a BAC. I kind of figured. Hey, Steve Burns. Good to see you, my friend. Always great to have Steve here. Always an honor and a privilege to have Steve in the chat. I mean, I think it's the best thing about this channel, honestly, hope you're doing well, Steve and Holly and the dogs. Steve says, looks like this pandemic will be going on for much longer than anyone expected. New York is saying this outbreak could continue until July while flattening out. Yeah, it's unbelievable, isn't it? Yeah, I think this is going to change the world. But yeah, thanks for that, Steve. Steve says, we could see the highest unemployment and earnings misses in history. Yes, I agree. No one's working. Everything's shut down. Steve says, for most traders, extreme volatility creates a greater potential for risk than probably reward. Very good point. Very good point. Great one, Joe. That was good. Joe says, thanks, Steve and Greg. You are welcome. All right. So real quick, let's look at the indexes and some of the majors. I mean, it's amazing how this just played out exactly to plan, how this pattern repeats over and over. We make a low, we reject the 30, we come back up, we find resistance at the 50, and that's all it had, and now it's on its way back down. Now, doesn't mean I can't get a nice higher low V1, V2 here. Test the -1 ATR channel, reverses back up with the V1, V2. That would be one potential trade. The other trade would be coming down here, like we spoke about before, testing this bottom. But if we did test this bottom, we would have a beautiful divergence. See how deep the red is? Then we rally with some green momentum. And then if we come back down and we don't have any red or very little red, we would have a double bottom with the bullish divergence. All that means is the second move down did not have the velocity and the momentum that the first one did. I studied with Dr. Alexander Elder. This is his favorite technical setup in the world. Double bottoms with bullish divergences. You also see, Andrea, how if we did come back down here and test, it would be within 30 days. If it happens way over here 45 days later, it's not as strong. So if we continue down strongly, I will definitely be looking for setups right there. TLT bonds have been rallying, not surprising. Oil, interesting on oil. Oil today actually at this point had a false breakout to the downside. Here we have a low, we rally, we come back, and then now we are back up inside the range. I'd like to see it ideally close above that -3rd ATR channel and above the 30 as well. VIX, look at VIX. Well, nice return to value here. Do have a V2, but this is one of those situations where we have a lower high. See, we came into the value zone, we bounced, we came back down, so we have a lower high. So ideally, before I took a trade, I like to see it wash out this low. Okay, so listen, before we go down through the watch list, before we look for, potential trades using the 3 criteria, right? Combination, confluence of indicators. 2, good risk to reward ratio. 3, being aware of too much correlation in positions, and definitely taking a look at our account heat. Before we do that, I did see this post. This is from Rushi Korea on Twitter. There's some really good Facebook posts out there. There's some really good Twitter channels out there. They have some great posts. Some talk about trader psychology. Some talk about, kind of trading words of wisdom, helpful things about trading. And Mr. Korea is one of them. Really love his post. I really saw this today, and I wanted to share it with you because, I was speaking. Kamal and I had a lesson last night, and I was talking about how I really felt like it was important that you don't have exactly the same trade plan with every trade. For instance, going from the 30, getting out at the 50 RSI. Nothing wrong with that approach, but if I have 6 positions, I think it's a good idea to say, look, I'm going to have a different trade plan for each one. One, if it goes 30, 50 rejects, I get out. Maybe the second one, if it goes under 30, over 30, instead of targeting the 50 RSI, I target the 50-day moving average, right? Just to give it a little bit of diversification, mix it up a little bit, have a little bit different time frame. And maybe on the third, just to take this example to an extreme, is I go under 30, over 30, and I stay in that thing until it crosses under 30 or hits the 70 RSI, right? I think it's good to vary up your time frames. And look, trading on a weekly is not a bad idea either, instead of just trading on daily. But when we talked about that, and then I saw this today, and I was like, oh, this is exactly what Kamal and I were discussing. But yes, there is a holy grail. If you are diversifying your portfolio between different kinds of strategies, right? And listen, that's what I do, and that's what I try to teach, right? Overnight SPY trade, that's one strategy. Moving average crossovers, taking a little bit longer term view, that's fine. Mean reversion trades, like 30 to the 50 RSI, or return to values, right, with the 50 back to the 70 RSI. And this is what he says: long only, value momentum, trend following, stocks, indices, and commodities, mean reversion, and intraday. So again, I just think it's important to have different trading approaches on different time frames. Some profit targets shorter or closer, some profit targets longer. It's kind of like an orchestra of trades, right? Some are longer, some are shorter, and different approaches like long only, trend following, mean reversion, intraday. So anyway, I hope this helps, but the takeaway here is, don't use the exact same trading approach for every single trade you take. Have some tools in your toolbox where you can look for dips, and you can look for momentum plays, and you can look for mean reversion plays, or overnight SPY trades, or anything like that. So I'm a firm believer in this. And in addition to that, with all the different trading approaches, have some different trade plans with those different trading approaches. Some profit targets further out, some profit targets closer. Of course, the closer one, you're going to be in fewer amount of days. The longer ones, you're going to be in longer. Get some intermediate too, cover those bases as well. So anyway, good advice. Thank you, Mr. Korea. Appreciate that. Oh, and by the way, at quanttrader_RK. You can find him there, or Rushi Korea. But thank you for that, and it's a great channel to subscribe to. Steve says, you're the best thing here, Greg. Thanks for all you do. Thanks, Steve. That means a lot, buddy. I really appreciate that. And thank you for all you do with your with newtraderu.com, with your weekly newsletter, with your courses, with your books. I mean, I owe a huge debt of gratitude to Steve. He's been my mentor and teacher for the last couple of years. And by the way, Kamal and I were looking at your site last night, and I really suggested that he sign up for your weekly newsletters, because I do, and I think they're great. So Frank says, hi, Greg and group. Hey, Frank. Good to see you, buddy. Appreciate you being here. Glenn says, small caps are getting hit bad, down 6.6%, leading market down. Would be interested to see how close S&P 500 gets to the 20,000 level. Yeah. Where are we at? Wow. Where did we get down to? 21. Almost 2,200. Let's look at this on the week. Let's go actually out to the month. Oh boy, that 2,000 level would be way down there, wouldn't it? Let's look at the quarter. Yeah, maybe down here to the 50 EMA on the quarter. Maybe even down here 1,800. It's amazing that we're even talking about this. Woo, boys, the market melting down. We're over 1,000 points. Back to our 1,000-point days. Okay. Well, let's get to it. Go through the watch list, see if there's anything today. We'll go down through this pretty quick. Okay, Apple, no bueno. Lost that 200. It's pulling away from it hard. Again, if we got down, could test this low at the same time, testing that third ATR channel, at the same time having bullish divergence, I would be very interested in picking something up on Apple or taking a trade if I got a trigger. Remember, you can have a good setup, but a good setup doesn't mean you buy. A good setup means the setup's there, but you have to wait for the trigger to get you involved. Adobe, similar to Apple, don't see anything there. Amazon, down 2.86%, not doing too badly here. I would be interested at Amazon if we could get a close under and then a close back, a higher low, break under and break back over the 200 would give a good risk to reward ratio. Alternatively, there is a good back tested approach of trading Amazon. It's the 5, 50 SMA. If that were to cross over, I might be interested in taking that as well. But possibly, with a close under the 200 and back over the 200, being that would be a higher low, right? We go down, we come up. This low would be higher than this low. That might be interesting. And Amazon is much stronger, has a lot of relative strength compared to the rest of the market. Boeing, oh goodness, nothing on Boeing. Berkshire Hathaway really pulling away to the downside again. Down here, double bottom with the third ATR channel, MACD divergence, ATR divergence, RSI divergence. Beyond Meat, nothing there. Caterpillar has been pretty strong here, but again, now we've closed above the -1 ATR channel. I'd like to see this come back down, stop going down, find some buyers, move sideways, have a false breakout to the downside and reversal, or in other words, a V1 or a V2, and that's where I might be interested in buying Caterpillar. Dow Jones, we're getting down to the -1 ATR channel. There's certainly a possibility we could find some support here. Also, if you take the low here and you take the high here, from a Fibonacci standpoint, Fibonacci retracement standpoint, back to about 50 cents would put us about right here. So I wouldn't be surprised if we find some support here, and then if we could go back up, get that higher low V1, V2. Ironically, we have positive MACD crossover, so we have some conflicting signals. Walt Disney, was very glad to get out of my puts yesterday at Walt Disney. Was fortunate enough to get them right at the high, so very, very happy with that trade. But obviously, I'm glad I got out of those puts, all of the puts yesterday. Etsy, nothing there. Facebook, just the same, rally back into the value zone. I really did expect. I didn't expect it enough that I was going to short this, but this doesn't surprise me because this is how it plays out. Under 30, over 30, rejects the 50 RSI, and then we'll either get a higher low V1, V2 or test the bottom. Gold, well, we talked about that. I do have gold. Bought it up here with the 520 crossover. Yesterday, I got out of half of my position. That was my trade plan because it closed both the 5 and the 20, kept the other half. And it is up today a bit today and did hit the 1 profit target. So sticking with my trading plan, as long as the 5 stays above the 20, I will keep the second half. Google down sharply today. Goldman Sachs, boy, look at that. Gap down, came back up, was denied by the -1 ATR channel above it. Again, look for a possible double bottom. Home Depot, same thing, same pattern. IBB, same pattern, don't see anything here. Intel, whew, boy, really getting beat up today. iShares, the Russell 2000 down 6.7%. I do manage an account for my friend. We were fortunate enough to buy him puts on IWM way up there. So I think on his puts, he's made almost 500% on these puts. So be grateful for small things that we did to have those puts and still have them. Johnson & Johnson got right up to the 200-day moving average, got rejected, didn't like it, wasn't surprised that acted as resistance. CarMax, well, interesting. Look at CarMax. Down today, but reversed from the bottom. Looks like we have earnings tomorrow. That should be interesting. Coca-Cola, don't see anything there. Lockheed Martin, relative strength is pretty good here today. Could possibly trigger a V2 tomorrow. Here we're down below the -1 ATR channel. We come back up into the value zone. We have a pullback. Again, I've mentioned this before, but I think it's worth repeating. People that buy lower lows, they are not in this for a long run. They are in it as long as it keeps moving up. They're in it for a bounce. Well, here, fine. Why get out of it? No problem. Well, here it starts to go sideways inside bar day. Most likely the people that were fortunate enough to buy down here will be selling, and that is part of the reason why I believe we have some of the downward move. Now, if we can get another move back up with a higher low V1 or V2, the advantage there is that the people bought here sold through here. Now we don't have to worry about these people selling into us if we go up, and it allows for an easier up movement. MasterCard, Pretty nasty. I did buy some calls on MasterCard, if you remember, right in this area. Sold them, was fortunate enough to sell them right here at the top. But, the reason I sold them is because we couldn't get above the 50 RSI. And so I did sell them, sold them for a nice profit, and thankful for that. But as far as a directional trade here, higher low V1, V2, or a test of the bottom. McDonald's also getting beat up here. I don't see anything. Merck getting beat up here. Again, looking for higher low V1, V2. Microsoft, one of the few stocks above its 200-day in the tech industry. Same with Amazon. If we could go under the 200 and over the 200 on Microsoft, I think it would give me a good risk to reward ratio, and it would also give me a higher low. If it went under and over, it would give me a higher low V1, V2, in addition to breaking under and back over the 200. So I do have my eye on Microsoft and Amazon if we can test that 200-day. Netflix, nice call yesterday, being getting out of Netflix. You had a nice trade on it. I don't see anything there. Nike, don't see anything there. Philip Morris, same pattern, don't see anything. PayPal, do not see anything on PayPal either. The Qs, again, under 30, went up, just tested the 50 RSI, just tested the just tested the 250-day above and pulled back. So, on the Qs, if we could get a higher low V1, V2, I would be interested in taking that. If we could get a double bottom with a bullish divergence, I would be interested in taking that. Now, and if it moves up and I don't get either of those trades, 5 crossing over the 20. So, if it goes down a little bit and reverses, I have a plan. If it goes down to the bottom, I have a plan. If it moves up, I have a plan with the 520 crossover, or possibly a close above the 250, or possibly a close above the 200. SLV, don't see anything there. SPY, got clobbered on that overnight SPY trade, but fortunate it was only a quarter position. I will be buying this again today, right at the close, quarter position. Teladoc up nicely today, came right in the value zone and bounced, but nothing there. Bonds we looked at having some issues with the 1 ATR channel. Tesla down 8% today. Interesting. A test of this 200-day moving average along with the negative third ATR channel, along with the divergence. Interesting, but not right now. Twitter, don't see anything. UAL down 18.5% today. Goodness me. UNG, no. UNH, nothing there. Oil up today. Is a false breakout to the downside. Interesting. Looks like we have a MACD crossover also, so who knows. VIX cranking up, but again, we came into the value zone, but we made a lower high, so I would really need it to wash out this low in order for me to get back to look at VIX. Verizon, nothing there. Walgreens, nothing there. Walmart was up earlier. Yeah, it still is. But relative strength is fantastic. Looks like we had a death cross when the 50 SMA crosses under the 200 SMA. That's a long-term moving average crossover to the downside, but doesn't really mean anything in the short run. But I don't see anything on Walmart. Energy, nothing there. Financials, I am going to have to get out of that today. Unfortunately, take pretty close to a scratch trade here. It is under where I bought it, but I did sell a decent percentage of shares up here in the profitable section. So, having a scratch trade, it's a bummer to have a scratch trade when you were up so nicely in it, but that's how it goes. It's really a sign of maturity in trading when you can take a scratch trade. Real estate, really getting pounded here today. Utilities, these charts all pretty much look the same. And Zoom down 6.24% today. I think they had some bad news, but they are coming into the value zone. So, in the future, coming into the value zone, stop going down, start to stabilize, start to move sideways for at least a couple days, then look for a false breakout to the downside and a reversal back up. That's what I call a V1 or V2. That might be interesting as well. So yeah, everyone, I don't see anything. I mean, in the future here, Amazon looks like a potential. maybe in the next week or so. How depends how things play out. Microsoft also, but really, just don't see anything to do today. Think it's better to just sit on our hands and wait for a proper setup, right? Gold is fine. 5's over the 20. I can keep that. SPY, taking that at the end of the day. XLF, I'm definitely going to have to get out of that in a few minutes here. And Apple, down 5.5% today. Now, I was discussing this with a couple of my students, I think with Kamal and also with Harsh, but here we lost support of the 200-day, or the 200-day started not becoming a valid support level because we went over and under and over and under and over and under. But this 250-day moving average did hold support. It has held support. It went under and back over. So if we went under the 250 and back over the 250, I would consider taking a position on Apple. That's a good back-tested approach to Apple. It doesn't have a high winning percentage, but the risk to reward's excellent. So, tomorrow, if we tested the 250 and closed above, I might be inclined to take that. If we closed under and then back over, I might be inclined to take that because the 250 to me still seems like it is acting as legitimate support where the 250 has lost it. Alternatively, down to testing this bottom here with a nice bullish divergence, and also ideally having this negative third ATR channel. That might be interesting. To the upside, if we have a 520 crossover, that might be good as well. So, a few potentials, just nothing today. Just nothing today. Gamer Greg, the last bullet point in today's trading psychology needs very tight stop orders. Ooh. Yeah, let me take a look at that again. Yeah, intraday small percent with high leverage. It's really not what I do. Sometimes I do take intraday trades, but I take them with the same position size that I would anything else, not with high leverage. And when I looked at this, like I said, I don't do a lot of this, but I know what he's saying. He's saying going after some intraday, very short time frames as well. And I usually, with my overnight SPY trade, I would consider my overnight SPY trade this bullet point similar to this bullet point. It's not a mean reversion. It's not trend following. It's not long only. But it's a shorter time frame. So yeah, I get your point though. I get your point. I am not a fan of anything with leverage at all. Frank says, oh, we got a poem from Frank. A bipolar market needs to take its meds carefully prescribed by the feds. As traders seek to guard their cash, they're still recovering from the crash. Hey, it takes time to heal from whiplash. Excellent and right on point, Frank. Let's give it one more shot. A bipolar market needs to take its meds carefully prescribed by the feds. As traders seek to guard their cash, they're still recovering from the crash. Hey, it takes time to heal from whiplash. So true, Frank, and right on point. And you're so correct that traders need time from this whiplash. And I've used this analogy before, but if you take a big rock and you throw it into a lake, you're going to have all sorts of commotion as the water moves out and rings and everything from throwing, right? That's what happened in this market to people's psychology. You threw a big rock on their head. There was all sorts of commotion. That's why we have all this volatility, fear and greed and volatility. What we need to do is we need volatility to go down. We need the water to become calm again. And that's kind of what you're saying there. I think what you're saying from the crash, and it takes time to heal from whiplash, right? Oakley dokley. So we have about 5 minutes. We're down 921 points. If anybody wants to take a look at anything, please let me know. I know there's not a lot to look at. I know that. But listen, sometimes just sitting on your hands and doing nothing is the best trade plan you have. Remember, there's three types of positions. Long is valid with a valid setup. Short is valid with a valid setup. And flat is a valid position. And I would say we have a valid setup to be flat right now. That's what Dr. Alexander always told me. He says all three are valid, longs, shorts, and flats. One's not better than the other. I mean, just imagine being flat here, like Steve Burns, right? Steve Burns has been flat through the majority of this downtrend. He had one or two that went against him, but okay, so he didn't make money being flat through this market, but he sure saved money, and saving money is making money, right? A penny saved is a penny earned. So, people say, oh, why do people buy bonds at 1%? They're only making 1%. Well, if they're making 1% and they missed out on a market where they would have lost 10%, they actually made 11%, right? Frank says, don't mention water. I'm fixing a broken water pipe today. Oh, okay, sorry, my bad. My bad. All right, well, I better clean shop here and go ahead and just get out of my XLF. It was a pity. It was a really nice profitable trade, but as it turned out, it was pretty close to break even, so I have to follow my rules, right? Okay, that one's gone. And that's it. Gold's fine. And then I have an order to buy SPY at the close. That's it. So on autopilot now. Be interesting to see how Apple closes. Let's take a look at this, right? I always talk about how much volume comes in at the very end of the day. Well, we've had, nice rally here. Oh, well, interesting. Here was a higher low V1 right here. That worked out pretty well, but it's a 1 minute bar. But what I really want to point out is you can see during the day, right? You can see the average amount of volume here. But you can see in the last 15 minutes here, you see how the volume's really picked up. That's the large financial institutions coming in and doing their business at the end of the day. And let's look at the last minute. I'm pretty sure this last minute bar will be 2 or 3 times any of these bars. All right, so we're down very close to 1,000. We are at 1,000 right now. Unbelievable. So XLF is out of there for me. I am really narrowing down those any positions, which is good. All right. Last 30 seconds. Well, looks like a little buying, who knows? But look at the volume pickup in this last minute, everybody. See the volume bar here? Yep, you can see that last minute, that's where the real volume comes in. And the last 15, but you can see the last minute always has the most. So, okay, all right. Oh, this was Apple. Oh yeah, look at that. Big bearish engulfing bar to the downside, V1 to the downside, lower high. Yeah, pretty scary. Hey, so listen, if anybody has any questions or comments or observations or jokes or, anything you want to talk about, please go ahead and just put it in the chat. Always glad to hear and discuss whatever you put in there. But before I do, just quickly, I want to put in my quick little daily plug and let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I love to teach. I really do. It makes it all worth it. Like I said, when I get emails and messages from people, letting me know that, what they've learned in my courses has really helped them. What they've learned in these live streams has really helped them. I mean, I don't teach anything different in my courses than I do in this live stream. I teach everything. I don't hold anything back, but there is an advantage to doing the one-on-ones because you can ask questions, and believe me, I ask you a lot of questions as well, just so that you really know what's going on. But I do have a course. It's 5 sessions. Each session, like I said, is one-on-one via Skype. Each session is between 2 and 3 hours, mainly 3 hours. I think all of my lessons lately have been 3 hours, which is fine, but I want to give people, if they get tired after 2 hours, then they can quit. But the format of the course is I teach you all my different trading approaches. I teach you everything I've learned from all of my teachers and mentors and coaches over the years, like Stephen Burns and Dr. Alexander Elder and Kerry Lavorne and Larry Williams. But I teach you everything I've learned from them. I teach you everything I've learned just on my own over the last 24 years of my trading career. And I think it's a good course. I think when you're done with it, you're really going to be able to look at markets differently. You're going to be very aware of risk. You're going to be able to identify support and resistance, V1, V2 entries, all sorts of stuff. So, if you're interested in taking the course, it is $1,000, but I know it sounds like a lot of money, but really for what you get, I really think it's worth every single penny. So, before I take on a new student, I like to have a Skype call with them. The Skype call is totally free, and I promise you there's no pressure from me at all or obligation for taking the Skype call. I hate when companies and people have pressure. Not at all. I mean, if we feel like if it's a fit, if our schedules line up, then we can go ahead and do it. Otherwise, no problem, and it was nice chatting with you on Skype. So, if you're interested in setting that up, you can send me an email. My email is in the description of this video. You can also reach out to me on Twitter and just send me a message there and we'll set it up and it'll be nice to talk to you. And then secondly, if you like today's podcast, I really would appreciate it if before you click out of here, if you could hit the thumbs up button. It helps the channel. I've had some issues with YouTube lately with sharing the podcast in my feed, although it seems to be getting a little better, but it's like a day delayed. But maybe on the right path. I don't know. I have a call tonight with a YouTube expert. I just really don't know why they put me in YouTube jail. I don't know. I don't know if it's because we were talking about the virus. Could be. Who knows? Who knows? But hopefully it will get resolved. Hopefully it will get resolved. But like I said, hitting the thumbs up button couldn't hurt, and I would appreciate it. So, all right. Glenn says DOCU. Pretty strong. I mean, obviously a lot stronger than the market. We're above the 180 channel. We're up at the 62 RSI level. We did have a crossover here, 520 cross, but I don't know if that's a valid crossover. For a momentum trade to the upside, probably not bad. Me personally, the problem is I don't see an entry. Doesn't mean that it can't go up from here, and doesn't mean that somebody would identify an entry here. But we did have an inside day, which is somewhat significant, right? We had a lower high, we had a higher low, so it's a little bit of an indecisive day here. Joe Turner gives a clap to Frank. Glenn says, move to electronic signing is going to be crucial for the future. Can see, that kind of signing, yeah. Can see Doc targeting 130 from 192. Wow, that'd be pretty nice. Let's look at it on the weekly. Let's look at it on the monthly. Yeah, that's getting up there, but in these times, who knows? I do know a lot of people. I mean, even if we got up to the extreme here, up to 122 on the weekly, but yeah, this is more of a having a thesis and on a company, maybe less technical, but just having a trade idea based upon a company and the current economic situations around it, both negatively and positively. Frank says, took a scratch trade today in VIPs. $15.90. Well, congratulations, Frank, on taking the scratch trades. I don't think people realize how important and what kind of maturity it shows in your trading if you can take a scratch trade. Larry Williams always taught me that. He's like, people want to make money or lose money. They don't like the thought of scratching trade. It's like having a soccer game where it's tied. It's kind of anticlimactic. But listen, if you take a trade, it goes up and your trade plan was to come back down. If you got to even or whatever, then congratulations. It's all about following your trade plan. It's all about creating a trade plan, having diversifications in your trade plan, and then following that dang trade plan, regardless of the win or the loss. Well, I'll tell you, yesterday I was not feeling so hot tamale. I felt a little fevery. I felt a little cold. I was sneezing, the whole thing. I barely have been out. I mean, I've been out of my house. I've been to the store like twice in 3 weeks, but who knows? It's scary. But I do feel better today, less fluey, just a little bit more cold. No hike yesterday. It was like the first day in a year, I think, that I haven't gone on a hike. Katie was looking at me like, okay, it's time. And I went to bed. And then we had an earthquake. We had another earthquake. Actually, the earthquake was in Boise, a few hundred miles away from here, but I felt it. I laid in bed and I thought I was delirious. I was like, I must be so sick that I'm imagining an earthquake. But I got up and Boise had a 6.5 or 6.7 earthquake. Amazing. Viruses, stock market crashes, earthquakes. My goodness. All right. Well, if anybody has any other questions or comments or anything, please let me know. Otherwise, I am going to attempt a little bit of a walk today just for Katie's sake. Hey, Brian's here. Good to see you, my friend. How you holding up, Brian? You keep him busy? Are you keeping busy with your books and studying? Always impressed with Brian. He's a fine young man. What's happening after hours here? Gold's down a smidge. S&P's down. Oil is down a couple cents. A lot of times in the markets, when you go sideways and then you have a down move or an up move, a lot of times it's followed that next day with another down move or up move or down move. At least in my opinion, that's what I've noticed. A couple up days and then maybe a pullback, couple down days, maybe go back up a little bit. And a lot of times that second down day will reverse, or that second up day, you'll go up and then you go up and then you reverse. So you go down one day strong, you go down the next day, part of the day, and then reverse. Of course, not always, but that's a bit what I've seen. Brian says, I kind of fell asleep, so I missed out on today's stream. I don't blame you. I almost fell asleep in the stream. But man, I'm so glad that I closed positions today on my USO calls. Oh, you bought calls today. Is that real calls or are those paper trading calls? Frank says, obviously, we're all very worried about everything. Absolutely. 100%, Frank. Natural disasters, the market, the economy, quarantine, paychecks, jobs. I mean, it's just hard to get our head around all this. But I'll tell you, I'm grateful for a little community here. You know, I really am. Brian says, no, I bought calls last week. Thank you, Greg. Get well soon. Thanks, Kamal. Appreciate it, bud. Have a good day, my friend, and good lesson last night. So your calls were up today at the least, right? They had to be with USO being up. Oil was up 3.8%. That's pretty significant, actually. All right, well, listen, let me let you off with just two things. One, please try to do something nice for somebody today. And in this environment, just call and check on your friends. See how they're doing. Maybe you know that person that lives alone or doesn't have a lot of friends. And, you know, give them a call. Just say, hey, I was thinking about you. Anything I can do for you, you know, it really might make their day. And in this environment, I think we need to be extra kind, right? And then what was the second one? Oh, yeah. A reminder again on the thumbs up or the thumbs down if you didn't like it, right? Let's be real. If you didn't like it, hit the thumbs down. If you found it useful, hit the thumbs up. Brian says, yeah. All right. All right, everybody. Well, I think that's it for me today. Have a good rest of your day. Be safe. Make that call to somebody. Just check on them. Say hi. Say I was wondering, seeing how you're doing. And, you know, things will turn around one day. The market will turn around one day. I've been doing this for so long that, you know, I mentioned this, I don't know, it was a few months ago when the market was just up every day. I was like, look, there's going to be a time coming where we are, I mean, right now, like we're hitting profit targets or I'm hitting profit targets all the time. I actually at some point was like, man, there's so many profit targets. This is so much work. Can I get those days back? Right? Be careful what you ask for. But what I mentioned was there will be a time where things change and you will feel like you're never going to make a penny in this market again. And I understand that's how it feels right now. But from experience, it will change. And there will be a time in the future where you feel like you will never have a losing trade again. So keep that in mind, all right? Keep that in mind. Miko, thanks, Greg. Glad you're feeling better. Thank you, sir. Appreciate that. Thank you, Brian. Thanks, Bing He. Have a good day, bud, in Singapore. Good evening. Zach says, what's not to like? You're awesome, Greg. Thanks, Zach. I appreciate it. Thank you, sir. It was nice chatting with you on Skype as well. I hope that helped. Brian, thanks. Mohammed, thank you, my friend. Good to see you, sir. Appreciate you being here. And have a good rest of your day. Stay safe. Take care of your health. And we shall see what tomorrow brings, right? We shall see what tomorrow brings. And so hope to see you tomorrow during the last hour. So thanks again, everybody. Take care. Have a good rest of your day. Bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.